This is News You Can Use.
As a service professional, the more you know, the more I know, the more value you and I can offer to our customers. Recently, we hosted Doug Duncan, Chief Economist for Fannie Mae, in our offices in Alpharetta, Georgia, for a comprehensive discussion for all the factors, past, present, and going forward, that are impacting the housing market. And as well, we had a discussion for his best forecast, specifically for the remainder of 2022 and 2023. Over the coming weeks, barring any significant change in market conditions, we'll be sharing insights from our discussions to provide you with a better understanding of our industry as we all face the unprecedented challenges and changes together. In this clip, Doug shares his perspective regarding the role that interest rates have historically played on the housing market in our lifetime.
This is News You Can Use.
What about interest rates? What role do interest rates play in driving the housing marketplace?
Interest rates moderate the level of activity at any point in time. And so what we've seen recently is the largest increase within a one-year time period that we've seen since 1989. And before that, go back to the late 1970s and early 1980s, and you'll see a couple of periods of even more extreme change. The problem with rising interest rates, which are significant in a very short period of time, is that incomes don't change that much. So this chart, this is one of my favorite charts. You'll see my favorite chart after a little bit. Last year's favorite chart, by the way, I have on a t-shirt, which I gave to you, I believe. Did you bring that with? He's
when you have a friend who's an economist and he gives you a gift, this is what he gives you.
Yeah. And just for the record, all tests are cumulative. So
I had it on one Saturday. I just took a picture of me and I said, Doug, I'm studying.
I don't have one of my favorite chart yet, but you'll see that in a little bit. The one that was just up there was the long-term history of interest rates. So if you go back to the very peak on the left-hand side of this chart, that was 1981, and mortgage rates were about 18%. Then at the bottom dip on the far right-hand side, mortgage rates were about 2.5%. It was 40 years between those two time periods. So most all of you in the room today have been in a declining rate environment with some temporary upturns from period to period during your professional careers. So this is going to be a new experience for the vast majority of you. And the change in those rates is driven by the rise in inflation.
And then once upon a time, I had asked you a question, how big of an impact do rates make? And you said, usually not that big of an impact, except, and this was an element, right? This was like 3 years ago, when they go up really, really fast in a short period of time, which we had not had an environment like that in a long period of time.
Yeah, we'd had a couple of tests. We had, for those of who were in the business in, say, 2012-13, in May of 2013, Chairman Bernanke made a speech in which he said they were going to eventually stop buying mortgage-backed securities. In the next 6 months, when interest rates went up 1%, home sales fell the next spring as a result of that, because incomes don't rise that fast. Right?
Thank you, Doug, for offering your perspective. As he shared, most of us have only operated in an environment with steadily declining interest rates. Today, we're facing a new challenge. The historic rise in home prices in 2020 and 2021, alongside the recent and rapid increase in interest rates, well, in combination, they've severely impeded buyers' affordability in the short term. The good news is that home prices have also seen a pretty rapid correction in the last few months. It probably will continue to correct in the days, weeks, and months ahead. So sellers, of course, are motivated, the ones that are, to negotiate with potential buyers. To meet this moment, Supreme Lending has launched several initiatives to serve you and your customers. Service professionals who know more can offer more. Here we go. Our brand new Lock, Shop, and Drop program allows buyers to lock in today without a property so that they can, in fact, shop for a property. But if the interest rates drop while they're locked and shopping, they get to drop to the lower rate. Lock in today with no property, shop for the property, get it under contract, and drop to the new interest rates if it's lower when you get under contract. Now you know more. Our 3-2-1 buy down and 2-1 buy downs, they provide tangible ways specifically for your buyer to secure a rate that could start as low as in the high 4% and then be fixed for a lifetime, going to 5+% and 6+%. Really changing the affordability day one, right now, when buyers who really want to buy can actually figure out a way to buy. Now you know more. Our two-step program allows buyers to secure a home today, finance it today, and then at no supreme cost, save thousands of dollars when rates do improve, which they're expected to a year and 2 years down the road, so they can refinance. All of these programs can be used in combination to help your buyers still secure the home they need at a payment level that they can afford. Reach out to your Supreme Lending Loan Officer today to design a custom plan to meet this moment and help your buyers and your sellers win. Service professionals who know more, they can offer more to their customers, to your buyers, to your sellers. And that is exactly what your buyers and your sellers need and want. If you want to know more so you can offer more, start with Supreme. Finally, starting with Supreme means you will finish with Supreme, and you and your buyers and sellers, you'll experience the industry's best customer experience, and we guarantee it. And that's news you can use.